Hi, my name is Steve Kingan and I'm Frontline Credit Union's CEO. Thank you for taking the time to view our 2020 annual general meeting. I'm sorry you weren't able to attend it live, but I hope you find it informative and entertaining. If you have any questions afterwards, please feel free to contact me at your convenience at 613-483-7342 or just shoot me an email to skingan@frontlinecu.com. Enjoy.
Hello everyone, welcome to Frontline Credit Union's annual general meeting for the year 2020. 2020 was a tough year. I'd like to start by thanking our senior management team for navigating us through this pandemic and our staff for working through it while staying safe and keeping our members safe. Not only did you keep us all safe, you made us feel safe coming to the branch. Looking back over 2020, COVID-19 proved to be more challenging than we would have ever thought. We experienced historically high savings patterns and some of the lowest interest rates on record. I'm happy to report on behalf of the Board of Directors that our credit union posted its third best year ever for a net income of just under $492,000 and asset growth of 18%. We had such a good year that we decided to pay down our entire bill for our payments modernization initiative of $374,000. This is a 7-year project that will keep our credit union moving forward with modernization of our digital footprint for e-transfers, wires, checks, etc. I'd like to give special thanks to Debbie Hamilton. We upgraded our IT and cybersecurity in 2020, which helped us get through the pandemic. Steve Kingham will provide more information in his report. Last year, we also underwent a FSRA audit. This is the Financial Services Regulatory Authority, which oversees credit unions in Ontario. We go through this process approximately every 3 years. Thank you, Lisa Tangay, Kathy Stewart, and the Audit Committee for completion of another successful audit. Our Board of Directors also had a busy 2020 with board training, self-assessments, strategic plan, policy reviews, and rewrites. This year, we have entered into an asset purchase agreement with Ottawa Police Credit Union. Although this is technically not a merger, we look forward to welcoming their members to our main branch and maintaining full operations at the police branch. This is subject to regulatory approval, and we anticipate a closure date of the end of June. Thank you to everyone for all the great work making our future bright at our Frontline Credit Union.
This year, due to COVID, we're coming to you virtually through Zoom from our boardroom at our main branch located at 365 Richmond Road, Ottawa. Last year, I addressed you for our fiscal 2019 as our best year on record. Think back, and at that time, COVID had just really started. The stock market was correcting, everyone was on lockdown, and the streets were like a ghost town. And we were all just trying to learn to quantify the effects of COVID as a disruptor on our lives. Honestly speaking, I was actually dreading back then what this report was going to end up looking like. As I step back and review the year, I can't help but think about one of the guiding principles my father gave me. When you're faced with adversity, understand it, learn from it, and then overcome it. I believe we followed that guidance, and it gives me great pleasure to share with you my CEO report for fiscal 2020. From it, you'll see that COVID has proven to be a managed risk for our business and nothing close to what we originally envisioned. The first chapter of COVID's story was back in April, May, and June. We stand proud knowing that we were able to immediately do simple, fast, and easy what our competitors couldn't by granting credit extensions due to job interruptions for those members who needed it, and we provided advice to those members who called for it. Although we stand in the midst of the disruptor, I think we all have a much better idea of how to go about our lives and the businesses despite it. I thank our lucky stars that we made the decision we did back in 2019 to upgrade all of our IT. This lent itself nicely as we were able to pivot the business on a moment's notice as COVID's evolution unfolded into the second chapter. We were able to engage half of our team immediately to work remotely and 3 more times due to lockdowns throughout 2020. I'm proud to advise you that we did not lose a single day of productivity nor service interruption for our members throughout all of 2020. This in itself covered the costs incurred for the upgrade threefold. Furthermore, it ended up being a cost savings to our credit union, knowing IT pricing immediately spiked once the pandemic hit. More importantly though, we were able to operate our business with the safety of our employees and members at the forefront of all that we did. Worthy of note, the upgrade also allowed us to tighten up our IT security of our system so that neither our credit union nor our members fell victim to the increased IT threats seen by other institutions throughout this pandemic. Throughout the second half of 2020, we pretty much operated as usual, aside from the stay-at-home order by the province at Christmas. Please know that we continue to hold pretty high restrictions in line with our public health guidance at our main branch, and our health branch remains closed for the interim for obvious reasons. Our IT vision continued in 2020 as we also paid upfront for our credit union's prorated costs for Payment Canada's Payment Modernization Initiative, which is underway and will continue for the next 7 years. This was a significant cost, but we believe it's crucial to the credit union's sustainability as we keep pace with the IT innovation for our members. Keep in mind that credit unions were the first financial institutions to implement remote deposit capture, so I'm excited to see what the program will innovate for us in the future. After accounting for the aforementioned, I'm proud to report 2020 represents our third best year in our credit union's history for net income. Coming in at just under $142,000, this is only about $75,000 less than 2019, which was our best year ever. Turning our attention to growth, we managed to grow the business from $121 million to just under $143 million, which represents a growth rate of about 18%. Add on our balance sheet, which stands at another $48 million. Again, another testimonial for us and our business. When you step back and you think about what a sound business model truly is and how it can operate in a harsh environment like a pandemic, I believe the proof is in the pudding that our business model has stood the tests of tests. That being said, success isn't driven by income and growth. It's driven by and conditional upon adherence to compliance within our industry. I am thrilled to report that we were given an adequate rating by our regulator for the examination they completed mid-year, a near perfect rating for our wealth review with the MFDA, and satisfactory reviews by both our internal and our external auditors. Turning our attention to the community and looking at what we did, I couldn't be prouder of the dozen or so sponsorships we supported throughout the year despite the pandemic. I am especially proud of the partnership we launched with our partners for the Salvation Army and Toy Mountain. The program was at the mercy of the pandemic in October. We synergized our efforts with our partners, and the campaign ended well beyond anyone's expectations. And a special huge thank you for ROFA. You guys are simply amazing. Drawing towards our people, they are the backbone of our operation. I'm pleased to report to you that we have improved our staff bonus structure to reward them based on productivity. And we've booked a team event at the end of the year, pending COVID of course, to recognize them. We also implemented a dual-pronged approach to their work schedule by implementing a 4-day work week. This has allowed them to maintain a better work-life balance while improving productivity overall. It has also allowed us to provide longer hours of operation for our members' convenience at no cost to the credit union. When you operate a business in the midst of the highest disruptor in history, the strength of the business is worn on its sleeve by the decisions that are made. I am blessed to have our COO, Debbie Hamilton, and our CFO, Lisa Tanguay, leading the charge, and the decisions they made throughout this pandemic are examples to be followed by colleague credit unions all over. I'm also blessed to have an amazing team, from the front counter to the back office, from the lenders to the wealth advisors. We have the best team in the business to service our members. Period. As Craig mentioned, we've entered into an asset purchase agreement with the Ottawa Police Credit Union. This transaction is scheduled to be completed at the end of June, and it's subject to our regulator's approval. Should the regulator recommend a special meeting and a vote, we will advise you. This initiative is beneficial to building our sustainability, and it supports our brand. It increases our size by 1,200 plus members and approximately $22 million in assets. I wholeheartedly believe that their membership will benefit from what we offer our existing members, and it'll give us the opportunity to broaden those relationships, which is mammoth to our business. My 2 asks of our membership for 2021 are simple. 1, have faith that we have the expertise, the pricing, and the products in place to refer your family and friends. I promise you, you will get a positive feedback from the referred party of an awesome experience. As our mission states, we'll treat you like 1 in a million, not 1 of a million. Second, if you have investments outside of our credit union that have not performed as you expected in 2020, please consider having one of our investment advisors do a second opinion for you. It's inexcusable for a properly diversified portfolio to not perform as it should when impacted by a turbulent economy. For fiscal 2021, the word nimble will be our buzzword for the year. Our revenues have been adversely impacted by 50% because of the government's pandemic response that has called for low interest rates. The pandemic is far from over and the landscape remains foggy at best. We will continue to navigate this storm like we did in 2020 by keeping everyone safe, the business operational for our members, and adhering to operational prudence. Lastly, I'm excited to report to you that we have launched our new website. A huge shout out to Danny Ropers, who has been working on it for the past 9 months under Debbie Hamilton's leadership. The address is the same, but the look and feel is purposely different. It's designed to avoid those common website journeys that are cumbersome and frustrating. It's modern, it's new, it has a community family feeling to it, and most importantly, it's easy to use. Later on in 2021, we'll be turning our attention towards the mobile app and the online banking, so stay tuned. Stay safe, everyone, and know we continue to have your back with whatever you need during these uncertain times. Thank you.
"2020 started out as a normal year in the lending department, but as we all learned, things changed very quickly. COVID-19 brought many challenges to so many people, and we were happy to be able to help out wherever we could. We offered loan and mortgage deferrals for up to 6 months, and we processed over 100 requests for those that were affected financially. We also offered loans to our business members who needed relief from mandated reduced operations and/or having to be closed during lockdown. These loans were granted under the federal government's CEBA program, the Canadian Emergency Business Account, and provided up to $40,000 in interest-free funding. One of the benefits of the program is the forgiveness of $10,000 if the loan is repaid in full by December 31st, 2022. During 2020, we received 295 loan requests for a total of almost $44 million. Of these requests, 269 loans were dispersed for a total of $41.5 million. There were 26 loans declined, including commercial loans, for a total of $2.3 million. Our Concentra Financial book of business held 36 mortgages for a total of $8.3 million. At December 31st, there were 9 loans that were delinquent greater than 90 days for a total of $117.6 thousand. The value and types of loans dispersed during 2020 are shown in the table below. At this time, I'd like to take this opportunity to thank our staff for their dedication throughout 2020, and I'd also like to thank you, our members, for trusting us with your borrowing needs. Thank you.
Thank you all for taking the time to join fellow Frontline members tonight for our annual meeting. As mentioned in my written report, the mandate of the Audit Committee is to be a liaison between the credit union's management, board of directors, internal and external auditors. Generally, the role of the Audit Committee encompasses 4 critical oversight responsibilities: review of financial reporting, risk management and controls, audit activities, and compliance activities. Together with senior management, internal and external auditors, the Audit Committee provides oversight that fosters an environment where risks are assessed and mitigated, reporting is accurate, timely, and relevant, assets and member interests are safeguarded, positive ethics are upheld, and compliance is assured. For the Audit Committee to ensure that these responsibilities are effectively completed, it should exercise sound, unbiased judgment and decision-making, have appropriate qualifications and competencies individually and collectively, be supported by competent, robust, and independent risk management and control functions, follow good governance practices for its own work as a committee, and seek third-party advice on certain matters where appropriate. The Audit Committee met 6 times since last year's annual meeting. The Audit Chair, and occasionally other Audit Committee members, had 5 meetings with our third-party internal auditor and 2 meetings with the external auditors. The purposes of the meetings were to review the report from the AML shop on the operational self-assessment of our anti-money laundering policies and processes, to review results of disaster recovery testing, to review the reports on staff testing of internal controls, to review the reports of all third-party internal audits, to review enterprise risk management quarterly reports, to review and respond to Financial Services Regulatory Authority of Ontario's examination report, to review the 2020 fiscal year-end auditor's report and findings, to review management's responses to the various audit findings, to review various policies throughout the year and make recommendations to the board, to make recommendations to the board on various audits and external auditor for 2021, to develop the audit plans for 2021. Members of the Audit Committee continue to be invited to participate in the Asset Liability Management Committee and Enterprise Risk Management meetings of senior management and PICA's, our third-party consultant. Jimena Martinez, our third-party internal auditor, carried out field work 6 times during the year to perform risk-based internal audit functions. Her work was very thorough with various recommendations that have been implemented by management and the board. McKay Duff, LLP, our external auditors, carried out field work twice during the year to perform audit functions with no recommendations having been made. The committee reviewed the reports on the operational internal controls review performed throughout the year by Lisa Tangay, Chief Financial Officer, and Gina Ranger, Accounting Administrator. The committee has no matters that require reporting or disclosure to our members pursuant to the Act or the regulations, and I confirm that the committee is conducting its activities in accordance with the Act and regulations. The committee would like to thank the senior management team of Steve Kingan, Debbie Hamilton, and Lisa Tangay for their dedication to their jobs and the assistance provided to all of the auditors and the audit committee during this unusual year. Frontline has developed a very cohesive audit group that has the best interest of the members in mind. We would also like to thank all the staff for their professional service, especially during this past year that brought about new processes and procedures to deal with the pandemic, to continue to provide the high standard of service to our members. I would like to thank Peter Hunt, Brendan White, and Neil Warren for their time and commitment during the past year on the Audit Committee.
Good evening, everyone. We will now walk through the 2020 audited financial statements. The first report on page 1 outlines management's responsibilities for financial reporting. The next few pages is our auditor's report. It starts with our opinion, and consistent with previous years, the financial statements present fairly, in all material respects, the financial position of the credit union at December 31st, 2020. This report also outlines the responsibilities of management and of those charged with governance. It outlines the auditor's responsibilities for the audit of the financial statements, and also outlines what an audit consists of. Page 5 is a statement of financial position. So this statement is a snapshot of the credit union's assets and liabilities at its year-end date of December 31st. Assets totaled $142 million, up from $121 million, and that increase relates mainly to member loans, which increased to $121 million, up from $110 million, and cash, which increased to $11 million, up from $2.3 million. Liabilities totaled $133 million, up from $111 million, and that related to the increase in member deposits to $132 million, up from $111 million. And the last section on this statement is members' equity, which totaled $9.4 million, up from $8.9 million, and we'll see the details of that change on the next page. Page 6 is a statement of changes in members' equity, which is essentially a continuity schedule. Focusing on the highlighted amount, retained earnings started the year with a balance of $8.6 million. You added to that comprehensive income of just under $492,000, to end the year with a retained earnings balance of just over $9 million. Starting on page 7 is the Statement of Comprehensive Income, which captures the credit union's activities for the year. Interest income was $4.3 million, consistent with the prior year. Interest on member deposits totaled $1.8 million, up from $1.7 million. There was a recovery of $60,000 on the impairment of loans, for a financial margin of $2.5 million, down from $2.6 million. And after other income of $640,000, income before expenses totaled $3.2 million, down slightly from $3.3 million. Page 8 outlines the expenses for the year, which totaled $2.6 million, consistent with the prior year. Income before taxes was $575,000, down from $677,000. And after taxes of $84,000, the credit union ended the year with net income of just under $492,000, down from $567,000. Page 9 is the Statement of Cash Flows, which outlines the credit union's sources and uses of cash. Starting on page 10 and continuing for the next 30 pages are the notes to the financial statements. We will not be going through the notes in detail, but will highlight the most relevant ones. Note 1 describes the credit union and outlines significant accounting policies. This note covers the next 9 pages to page 18. On page 18, Note 2 outlines the critical accounting estimates and judgments, which include the fair value of financial instruments, the member loan loss provision, and income taxes. Moving ahead to page 20, Note 4 provides additional details on the credit union's investments. Starting on page 21, Note 6 provides additional details on the loans to members. Moving ahead to page 24, Note 7 discusses the allowance for impaired loans. On page 26, Note 9 outlines the composition of the member deposits. Moving ahead to page 30, Note 13 discusses the restricted and related party transactions. On page 33, Note 15 outlines the financial risks that the credit union is exposed to and discusses how it manages those risks. On page 38, Note 16 addresses the credit union's capital requirements. And on page 39, Note 17 highlights any contracts or commitments that are outstanding at year-end, and Note 18, which is the only new note disclosure added this year, addresses the future impact that COVID-19 might have on the credit union. So this concludes our presentation. If you have any questions on the audited financial statements, please forward them through Steve Kingan.
Hello, ladies and gentlemen. My name is Roger Jeffrion. I am this year's chairman of the nomination committee. I would like to report to you that this year we have had a lot of active interest in our election process. We have presently 3 terms expiring, plus the additional seat just added from our bylaw amendment. We had a total of 7 people express interest. Of the 7, 3 have decided to explore our associate program in lieu of running for election, and the remaining 4 have been formally nominated. Therefore, all incumbents will be acclaimed. So returning are Craig Morrison, Kathy Stewart, and Joey St. Jacques. In addition, congratulations and welcome to Steve Boucher, who is new to the board and will be resigning from his position on the Ottawa Police Credit Union Board. In closing, I would like to thank all of the members who have expressed interest, and I look forward to meeting with you shortly. Good evening.